it's a funny thing because you look at the losses, you look at what took place last year, and then you have to extrapolate out about what you think the future of this is going to look like this year.
Absolutely. I mean, there was a lot of good news in last night's results. They beat on the revenue line by $490 million, but on the operating income line by $1.9 billion. So it's just an incredible, there's a lot of leverage in Disney's businesses, most apparent at the theme parks, followed by film. And on the direct-to-consumer front, which of course is what most investors care about right now, they just blew away the Disney Plus numbers, but notably beat on Hulu and ESPN Plus as well. And I guess the other point, as we look out, consumer demand seems really strong. Vaccine rollout is progressing. So you're hearing good news, hopefully, on the theme park front. But there are price increases coming at the direct-to-consumer services. Right. So there's a lot going on.
Jessica, just so I understand, in terms of raising your numbers and your expectation, you believe people are back in the theme parks and back in film theater, watching films in theaters when to make your numbers?
We have a gradual increase. We don't really expect anything this year. So most of our numbers are 22 and 23. And our price objective is based on 23 and discounted back to today. So 23 being the normal year.
Okay. Tom, let's talk about some of the growth numbers in the streaming world. The Hulu piece of it's almost as extraordinary, if not more so, than what's happening at Disney Plus unto itself. No?
No, I don't really think so. I think the Hulu advertising number looked particularly strong. They looked like the revenue per sub coming out of Hulu was very strong. The sub numbers, not so much. I'm a little more cautious than Jessica here. Look, you got to give Disney a lot of credit for how much strength they came out of the box with subs, and looks like they will have created in the course of a couple years, by the end of this year, a direct-to-consumer business with about $17 billion of revenue, which is really quite a feat. But I think a lot of that is already priced in. We got to remember that since they've announced streaming, the company's market cap is already up about $130 billion, while their whole media network side and the movie studio side have clearly lost value. So there's a huge amount of value in the direct-to-consumer streaming business built in already. But the market seems to respond to the headline sub number in a huge way. And that's where I'd really express some cautiousness. Not all subs are created equal.
Shepard Smith here. Thanks for watching CNBC on YouTube.